Australia as well as Japan, which is both opened up higher today in trade.
Bajaj Auto, like TVS Motor in this challenging environment, has come out with numbers which are much better than estimate.
On the downside, lows should not break. I mean, 22,786 is the low in the Nifty. So it's going to be about 1/3% higher. It is 0.36, 23,040.
We anyways have an opinion that sometime later in the year, there could be rate cut possibilities. I'm just trying to debate whether it is immediately or not.
The electric business now is about 22% of our domestic revenues.
180, it's absolutely in line with the analyst estimates of the fair value of the company.
The Nifty right now is up 150 points above 23,100 and very close to yesterday's intraday high of 23,137.
We are going in for this 3,000 crore IPO, and yesterday we had the anchor list done up in which we had collected 875 crores.
It may be possible that, select financially weak PSUs, the government may like to retain them as a going concern.
The index at the day's high, a sharp rebound in the mid and the small cap indices, and a slew of earnings.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
That was the day so far, and it's a much better day. The benchmark indices are up close to about 0.8%. Broader markets racing away. It's a solid outperformance with the mid-cap index up more than 2%. That's the situation as of 2:30 p.m. this Wednesday afternoon. You're watching Closing Bell. We're live from the CNBC-TV18 Motilal Oswal studio. I'm Reema. With me, Surbhi and Nigel. Hi.
Hi, folks. It's a good day and haven't seen a good solid day like this in a while, because the gains are being held intact. There are decent results that have come through, so there's buying on the back of that as well. Feeling good.
Well, you hit the nail on the head, Surbhi, because the good numbers are being, respected. They are being gobbled up, so to call it. You have TVS Motors, that's one of the big gainers after gaining yesterday. You have a few more stocks in the broader markets as well. Ami Organics came out with its set of numbers. The stock, as we speak, is up closer around 15%. So I think we should get that one up for you. Deepak Fertilizers came in with its numbers closer on 45 minutes or so ago. That one is up another 10%. So big move is what we're seeing out there. KPIT Technologies. I'm talking about some of these names from the broader markets as well. Orient Pro, yesterday they came out with a set of numbers. The stock was down. Today the street is buying into that. The stock is up closer around 10% as we speak. And Sirma SGS, the stock had lost 35% of its market cap. And that stock, in fact, is now up closer on 20%. So after seeing a sharp downtake, the street is now appreciating good set of numbers and latching onto it. Now, they say in cricketing parlance, sometimes if you're not in form, at least spend some time in the middle and try to knock in some runs. Runs under the belt is good, but feeling on the right side of things is even better. So I think, that's well received by investors today.
And even the others, right? So at least for Sirma SGS, there were good numbers. But Akane's Technology is rebounding. Yes. There is a Jefferies upgrade there. PG Electroplast is another one, up nearly 9.5% on very good volumes. There is an uptick that you can see.
Last evening, I spent some time with the gentleman who heads the investment committee for HSBC Global. And the first question I was trying to understand, that you're advising clients across asset classes, across markets, where to put money. And I also spoke to him about the selling of FPIs here in India. He said, yes, that's happening. But, tactically, it's a short-term issue. We don't see our view changing on India in the long term. And even on US tech, I mean, the rebound happened even immediately overnight. But, here are money managers who are taking a longer-term view, saying the AI story is not going anywhere. Maybe it's not NVIDIA that benefits. Maybe it's a different entity. Maybe some of the users of those chips will benefit even more if they, let's say, end up getting, an LLM at lower price. So I think some of that, faith came back into the market, so there's stability overall. By the way, there's Fed tonight, let's not forget. It's expected to be a largely, uneventful Fed meeting because there's no rate change expected. But that stability has helped us get back as well.
And Powell commentary, right? Because the first comment from the Fed chairman post-Trump.
The election.
Post the election, right? So,
Surbhi, next time you meet that gentleman, just tell him we appreciate this commentary. Where's the money? Tell him,
I tried asking. I said,
India's a long-term story. It's it's a structural bull run. Paisa ka bhaiya, where's the money?
FIs have sold 2.5 lakh crore rupees since October, November, December, Jan. 2.5 lakh crore rupees. That's massive.
Absolutely. There's no taking away from that. But see, the thing is that there are buyers at lower levels. Now it's a question of who shows the intent first. And days like today kind of, reinstate that belief that you've got to go out there, start nibbling in. It's impossible to catch the bottom. But I think today is that day. Why am I saying today is such a good day? Today is the day where people are showing the faith. There is money that's coming back into a lot of these stocks, which both Nigel and Rima have described, and even where management commentary, for instance, an RR, cable, or you've got a couple of names, for that matter, even a JSW Energy. That stock's still down. We'll talk about it, 7-8% down. But where managements are showing some optimism and where they're giving a convincing story about improvement in margins ahead, etc. Today, the market is in the mood to listen, which is not what we had in the earlier part of the week. Anyway, there's a lot of ground to cover, and we have to go over a lot of these individual stock names as well. So let's get started. We, as usual, have Mitesh with us to take us through the last hour strategies. First up, Mitesh, good afternoon. So tell us, it's been a good day so far. Now, last hour trades, index, Nifty, Bank Nifty stocks. What are you doing?
See, good afternoon. We've been advocating maintaining long position primarily on the belief that the Bank Nifty is showing very early signs of a bottoming out. We had a double bottom, then a gap breakout yesterday, and today the gap is held, and with some volatility, the Bank Nifty has again started moving on the upside. So that suggests that the Bank Nifty could test 49,350, 49,700, 750, and in a good case scenario, 50,000. And then beyond that, I'm looking at a proper uptrend. So all those signals are there. Now the price has to give some confirmation, but given the fact that these signals are there and these signals have occurred at very oversold levels, the chances are very high that we would have made a temporary low, at least if not a proper reversal kind of formation is yet, but a temporary low seems to be in place. And with that, I've been advocating maintaining long bias and positions. On the Nifty also, once 23,150 is crossed, expect 23,350, 400 zones, and then we'll look at higher levels. For the time being, I have a buy on HDFC Life with a stop at 620. Look for targets of around 645, maybe even higher levels over here. But that's the first target. And then a buy on ICICI Bank with a stop at about 1237 for targets of 1280.
Got that. Let's talk about KPIT Tech. Now, KPIT Tech was a rank underperformer. From its 52-week high, the stock is still down close to about 29%. And after Tata Tech came out with the numbers and they disappointed on the automotive spends part, automotive revenue, the street went into KPIT Tech's earnings with a little bit of skepticism. But the numbers are better than what the street was anticipating. The company's top line grew by 2% quarter on quarter, ahead of estimates of 1.5%. EBITDA margins expanded by 60 basis points to 21.1%. And the company has raised the margin guidance. Their earlier guidance was that we will do margins above 20.5% for the full year. Now they're saying it will exceed 21%. The top line guidance has been reaffirmed. So they're saying that revenue growth will be between 18 to 22%. They're somewhere after 9 months hovering in the middle of it. So the 9-month top line growth stands at 20.7%, and deal wins are very, very robust. Deal wins are the highest that we've seen in the last 2 or 3 quarters, up 14% on a quarter-on-quarter basis. So that's another important internal. Prakash Diwan, market expert, is now with us on the show. Prakash, the street was very concerned about the automotive slowdown, ER&D spends, particularly emanating out of Europe. And even the last few data points, like KPIT's Q2 numbers, were a bit disappointing. Yeah. So keeping that in context, how would you read these numbers? Is it a one-off? Is the slowdown a little more, what's the call now on KPIT and the likes?
So good afternoon, Rima. So I think essentially, it'll probably take a quarter more, or at least a quarter or two more, for this weakness to be shrugged off. Primarily because whatever you've seen in terms of a comeback from markets like Europe and some of the newer segments that they've been foraying into are yet too early, to be able to take a call on and say, okay, this is turn the corner. So I would say it's one-off. It's probably early days, but the trend will probably take another quarter or two for the numbers to grow. So, an 18% guidance on revenue growth, or let's say 21% margin, is nothing very earth-shattering for the stock to recover this 30-35% dip that you've seen from its recent highs. And by the time if earnings catch up, the valuations will also probably look more attractive. But till then, all of these players will have to be a bit tepid in terms of what their expectations on P multiples could be.
Got it. All right. Prakash, did you have a look at a couple of other names? Ami Organics, Deepak Fertilizers. Those stocks are up more than 10%. They've come out with a decent set of numbers, and both of them rocketing away. Did you have a look?
No, absolutely. Deepak Fertilizer, I did take a look. I glanced through. Ami, I haven't been able to really go through. And what's very clear, the message is clear by the market, that the market is willing to put incremental capital at work where numbers are far better than what usually the expectation is. Remember, Q2 has come in with such a disappointment on earnings. Q3 has started off, if you really ask me, on a very, very strong footing. In fact, there's quite a few players who have reported better than their last 3 or 4 quarters earnings. So, and seasonality aside, on an absolute term, also some of the improvements are very distinct. So I would not write off this earnings season very easily. And specifically on Deepak Fertilizer, it's something which has what's contributed to Deepak Fertilizer is something which has been anticipated for the last many quarters. Finally, it's kind of coming to bring that benefit in, and that should continue. That should kind of strengthen going forward, and that's where the market is very excited in terms of loading up the stock today.
Yeah, absolutely. And I guess it's also positioning, right? I mean, we just haven't heard good news from many of these chemical companies in so long that you almost don't believe it when it's coming through, and therefore the stocks are reacting. It's that surprise factor that's really sort of perhaps responsible for the kind of gains that we're seeing. Got that, Prakash? Okay, Prakash, let's talk autos. So now you've seen and heard TVS, Bajaj, even Maruti. So what's looking the best to you from an investment standpoint?
No, I can't get my eyes off M&M as well.
Of course. But M&M, we are yet to hear the numbers. I'm only talking about the companies that have reported and who's standing tallest.
No. So if you look at Bajaj Auto, while a lot of those things, positive things have come into the numbers, there's a lot of dependence on exports, which will need the stock to kind of rally forward. So, domestically, I spoke about this. The Chetak launch has been very successful. Their incremental market share is kind of stabilizing at that 35% mark, which is really one electric scooter out of 3 sold is theirs. And they have very good margin profile as compared to some of the other EV names. On TVS, I think there was a surprise element because the market didn't expect the premium segment to do so well. But they've kind of done well in spite of a lot of competition, which was expected, but which hasn't happened because of lack of new launches. On Maruti, I think very clearly you'll have to give it time for the EV segment to really start kind of looking up. And the management commentary has to reassure everybody that the ICE variants, also the hybrid variants at least, will have some sort of a launch flow, which is very important for Maruti to keep utilizing the big capex that they've done. And I keep saying, realization levels have to move up only with good launches, good products, because in India it's very difficult to make money on selling cars, given the taxation structure and the price point. So I think we'll wait for that to happen from Maruti, but otherwise very strong, very good numbers, but you'll need much more for the stock to do well from here. And then we'll of course wait for M&A.
Yeah, though the market move on these stocks has been really interesting. We saw that Bajaj chart. Let's get the charts back up. Bajaj is off a good 30-35% from its 52-week high. TVS has done really well. TVS has also corrected, but the correction is about 13-14%. And that's Maruti. Maruti is off about 12%. No, these are today's charts. We should put out one-year charts to understand the positioning on these stocks. Bajaj ran up to 12,000 plus, but then an equally sharp decline in the last couple of months. It's, you can see that that's a 30% cool off from the peak. For Maruti and TVS, it's about 13, 14, 15% thereabouts. Let's go to Sudarshan to understand what is working for Maruti and what isn't. The bigger story obviously is going to be on the launches ahead. But as far as Q3 is concerned, Sudarshan, what's the highlight?
The first question is there anything to complain in Maruti's Q3 earnings? The answer is no. Earnings are absolutely in line with estimate. So the second question is, why is the stock down? Well, if you talk about just this month, the stock price of Maruti is up 10% and it has outperformed its peers. If you check the stock performance of M&M and Hyundai, both the stocks are down 9% each this month just in January. So what are all the factors that have worked for Maruti in Q3? First, volumes have seen a growth both on a sequential basis as well as YY, up 5% sequentially, up 13% year-on-year. Second, raw material costs seem to have stabilized in last few months, and that seemed to have helped margin move higher. Third, margin has fallen sequentially, that is just down 30 bips, and it has outperformed Hyundai. Fourth, realization has also fallen sequentially, but it's in line with estimates. Coming to the main numbers, profit is up 13%, revenue has increased 16%, even EBITDA is up 14%, and margin continues to hold the levels above 11.5%. So all in all, it's a good set of numbers. We'll have to see what exactly management says about the demand going forward.
Okay, all right, got that, Sudarshan. Thanks very much. Just to round this up, Prakash, going back to you, quick 10 seconds. Apart from M&M, if you were to buy into another auto stock now, given the decline in the market, which one would it be?
Well, it could be Maruti. Maruti definitely is, got everything going for it. It's just relative superiority between M&M and Maruti that you talk about. But yeah, from these numbers, and if the commentary tells you everything positive, go ahead.
Sirma, SGS is now up close to about 20%, and the entire EMS basket is rebounding. Prakash, did you think the correction seen in these stocks was done? Are they in for a rebound, or is this the opportunity to lighten up if you didn't get a chance before?
Difficult question, Rima, because I'm quite confounded by the ferocity of the bounce back. I thought things could start looking up for some of these names where the numbers have been very encouraging. They would start inching up. There'll be accumulation gradually. But this is like look at NetWeb, look at Sirma. I mean they reached the limits of whatever they could do in a day and on the upside. And that tells you that the market could still be behaving a bit irrationally on some of these counters which have low float and hence the price behavior. So I would take it with a pinch of salt, not necessarily kind of continue buying into it just because others have bought and hit a 10 or 20% filter. Numbers are good, but then you need to look at what's likely to be in the next 3-4 quarters for you to be able to hold that stock in a profitable position. So that's what you have to look at the results with, not just what's happened, but what's likely to happen in the next 4 quarters. If you get that indication, then you can. But I wouldn't buy into Sirma at this level.
Okay, all right. Prakash, I wanted to ask you if you're tracking Piramal Pharma. The numbers didn't look too bad. I recall this morning the stock opened up gap down though 5%. From the lows, the stock is now up close to around 15% actually. It's up 10%, but from the lows, it'll be up more than 15%. So any of these names, Piramal Pharma, Apar Industries, that was down 20% yesterday, it was down another 5% today. That's moved into the green. Some of these big movers, any view on them?
I think Apar definitely has a lot going for itself, and I think the move on the way down was because this sudden potential disruption that people thought was on the way from AI usage of data centers, and hence the cut in demand for power suppliers. But then it's too much of an irrational decision, knee-jerk reaction, and things are finally falling into place. But in Apar at lower levels, it's definitely a very wonderful opportunity. Look at the order flow that a transformer rectifier is getting even at this point in time. They're talking about growth, which is almost going to double their revenue in the next 2 years. So I'm quite positive on that space. Apar is one of the well-run businesses. And people had this complaint that it was too pricey. It's probably giving you that 15% discount from where it was, let's say, just a week back. But Piramal has been too volatile. I mean, the moves have been so crazy. I haven't understood. I've never been able to attribute much of reasoning to it. I remember speaking to Prashant some time back, and I said I can't explain how the stock has moved from its low to the highs, and from the highs to the lows and back to the highs. So it's quite difficult to see till the business stabilizes in terms of revenue visibility, and we will probably fathom more beyond that.
By the way, JM Financial, which opened with a cut of about 10 to 12%, is now back in the green, or at least it's flattened out. So it's erased about 12-13% from lows. And even a Motilal Oswal had open trade in the red. It was subdued in the first half, but now it's up close to about 3-3.5%. So there is recovery seen in many of these plays. Prakash, what about NetWeb? The stock has fallen a fair bit. Is the market overreacting to these concerns? DeepSeek threatening the entire AI spend, and it will affect companies like NetWeb? Come in.
No, absolutely. I think this DeepSeek thing is probably been taken. I mean, it's taken the digital world by storm with a storm because it was absolutely unexpected. And given the fact that the US-Chinese geopolitical axis is at such a stage that anything coming from China which threatens, existential, level crisis for American companies is something that people will, magnify in terms of impact. And that's exactly what's happened. While cost of AI computing comes down because of any potential disruption, and this could be one of those, it doesn't mean that we have enough facilities and infrastructure to support AI growth. So, so whoever is in that space, whether it's a NetWeb or an Anantraj from a tangential perspective, I don't think we could write these companies off when there's so much of investment that is yet to come in and make meaningful scale. So, absolutely overreaction. NetWeb has probably been rising also too fast, and that's where a lot of people were sitting on profits to be able to get out at whatever levels. And the smart money will start coming in at lower levels in some of these businesses. Now, whether today's move is the last that you see on the bottom has been made, I have no answers to that. But I'm sure there will be allocation that will keep coming to some of these long-term positive businesses and at lower levels especially.
Okay, all right, Prakash, I wanted a quick word on Interglobe Aviation. I'm just reading out comments from Mr. Prahlad Joshi, who is the Union Minister of Consumer Affairs. He's talking about the very high pricing for people who are trying to travel to Mahakumbh. He's also saying that keeping the consumer interests in mind, they have written to the authorities, that's the DGCA India, to take steps to reduce the prices of airfares. Now this stock has become, it's increasingly becoming more and more popular, and from more powerful, people we're hearing this. Your view on Interglobe, it has a large part of the market share, but could rates or prices come under risk?
So, the counter that most airlines would give, and in this case, even Interglobe, is going to be the lack of aircrafts that they have. Now, the fact that they don't have aircrafts, as many aircrafts as they would want to, and they've ordered and they, have leased operational with them, it makes it very difficult for them to fly to certain sectors at rates which are not competitive. So the reason why they've jacked prices, and that's a justification they'll always be ready with, is that if you had to fly to Prayagraj, which is a small airport from all over the place in the country, you will need those many slots, you will need those many aircrafts, and to take them away from some of the more lucrative sectors, you will have to kind of tweak the prices upwards. So that's the experience. It's not just Indigo. Look at what Air India or SpiceJet are doing. They're also probably in the same genre. What's more important is that something needs to be done to ease the supply side. Air India has about 590 aircraft still to be delivered. So, and they've started putting that out in their in-flight magazine, which is really like the last mile connectivity with a passenger. So that's where something needs to be done. I don't think any kind of intervention is going to be very permanent or very long lasting in terms of a solution. So the Kumbh could go, something else could come up, and the prices will continue to disturb consumers. Consumer interest, of course, is a different thing, but I'm sure it's a constraint, supply constraint that's causing this trouble. Interglobe as a stock is very good. You could probably make money on the stock and pay for higher prices on the tickets, is my guess, because it'll continue to do well from here on. Also, the efficiencies that they've reached, the scale that they are at, in spite of all the shortages that we are talking about. And with crude remaining soft, I don't think there's any reason to worry till they do about 20-25% upside from here.
So you'll stay positive on the stock is what you're telling us. So you continue to remain your positive stance, right, Prakash?
Absolutely.
Got it. Pleasure talking to you, Prakash. Thanks a lot for joining in. A far better day. Portfolios are feeling good, and we appreciate you joining in and giving us your take on all of those stocks. For the time being, slip into a short break. On the other side, we have Varun Goel from Mirae Asset Investment Managers, who's waiting for us.
Welcome back. Well, we have with us Varun Goyal, Senior Fund Manager, Equities at Mirae Asset Investment Managers, to take us through the market view. This afternoon, Varun, great to have you on. So it's a broad-based recovery that we're seeing, and the bulls will really, heave a sigh of relief. But tell us, what changes, if any, have you been making to the portfolio? What have you been sort of offloading in the market, and what have you been buying into this fall? Because there's been a fair amount of churn. So just tell us the top-down view and the whole portfolio stance right now to begin with.
Good afternoon, Subhi. Thank you so much for having me on the show. I think in the last 5-6 months, we have seen Nifty correcting around 10-12%. And I think the small and the mid-cap space has seen a much bigger correction. If I'm not wrong, as of yesterday, the small cap index has corrected around 19%. So there's a lot of interesting and exciting opportunities emerging there. From a broader market perspective, of course, the market has to navigate 4 large events. One, of course, is the earnings season, which continues to be, and I think it's a little somber. We also have, of course, the new administration in the US, and we expect some more announcements to come along the way. And then, of course, the next week we have the budget and then the RBI policy. So, I think these are 4 large events, and we hope that some more measures will be taken both by the government and the RBI to revive the growth. We have been seeing some kind of a cyclical slowdown. So our sense is, while FY25 will be low single-digit kind of earnings growth, FY26 is where we should go back to that 12, 13, 14% kind of earnings growth, and we should see a healthy compounding for the markets also to start coming back. I think last year in February, markets were at around these levels, so we are almost spent a year with almost low single-digit or zero kind of returns. As the cyclical bounce in the economy plays out, as we see more investment in infrastructure coming back, as we see revival of rural consumption post the harvest of the Rabi crop, which looks quite healthy, I think FY26 should be the year of revival in GDP growth and, of course, market earnings also. So remain constructive on the large cap space. I think small cap space definitely has become very, very interesting post the recent correction, and we continue to find several opportunities there.
All right.
Can you talk about these opportunities?
So I think, if you look at the various sectors which have seen fairly large corrections, so if you look at whether it's capital goods, I think while there was some cyclical slowdown on investment, especially from the government side, I think if you look at the medium-term trajectory, it still looks pretty interesting. I think residential real estate, again, something which has corrected quite a bit. I think the cycle, we are still in midway. If you look at the affordability metrics, so I think there are several opportunities there. If you look at the capital marketplace, I think fairly large price damages. That's again something to look at. So I think across the board, I think some of the more cyclical parts of the economy have seen very large corrections, and we definitely see opportunities emerging there.
All right. Hi, Varun. Good afternoon. Good to see you. And Varun, after this 12-13% correction on the Nifty, what all is in the price? The earnings miss is in the price because that's got scaled back. What else is in the price? The slowdown in the economy is in the price, or do you think there's further downside? On the headline index first, let's talk about. Do you think that bulk of that pullback is done?
Yeah, so Nigel, so if you look at, so let's say FY25, we're looking at 1,050 EPS. I think if we take 12, 13, 14% kind of earnings growth, FY26, we're looking at, let's say, 1,200 rupees on Nifty. On that basis, we're trading at around 18.5, 19 times 1 year forward earnings, which is fairly reasonable. I think the 10-year average is around 17 to 18 times. So one could argue that we are still 5-7% more expensive, but then that correction may or may not happen. We don't know. It could happen in terms of time. It could happen in terms of price. So I think from a broader market perspective, we are, let's say 5-7, 10% kind of correction is possible if you look at the historical matrices. But like I said, the more important thing is how quickly we see the cyclical revival in the economy. I think this year's GDP growth expected to be between 6-6.5%. Next year, we're quite hopeful that the government's infrastructure spend will come through. Some kind of stimulus in terms of tax cuts, if it happens, will be great. And of course, there is the expectation of rural recovery. All these things together will take the economy towards a 6.5-7% kind of GDP growth, and which will take corporate earnings back to that low to mid double-digit kind of range. And that should be the driver of the markets going forward.
Everyone's watching for what the budgetary allocation to capex is going to be for FY26, considering the slowdown that we've seen by government spending so far in FY25. Do you think keeping, how would you approach all these infrastructure, highway, roads, defense stocks, keeping that in mind?
I think while till November the activity was a little muted, but I think post that things have started to catch up. Definitely for sectors like roads, we've seen activity start in a very meaningful manner. I think some defense orders also came through, so it looks like the engine is that whole ordering ecosystem is getting back into action. And our sense is that the government will continue to focus very aggressively on the infra side, be it roads, railways, ports, metros, and some of those areas, and defense included. And we should see a second round of growth acceleration in some of these sectors. So one is hopeful that we will see some of these stories come back in a meaningful manner.
What about this big debate on AI and the kind of disruption we are seeing from the big Chinese player? All of a sudden, it caused a lot of our tech stocks to sell off, but you can see a lot of them actually seeing some kind of buying interest. After all, tech was the one that was outperforming, and suddenly this news came and, it was trying to derail that entire rally and the interest in these stocks. What's your view on tech as of now?
Yeah, I think, so I think technology, AI is for real. It's going to be a bigger and bigger part of all of our lives going forward. So we can't deny that. I think as far as corporate India is concerned, Indian tech companies, they're embracing AI in their own manner. I think eventually, it's never good to fight technology. You have to all embrace it, make it your friend. And I think most of companies will be doing that. So we remain quite constructive on the tech space. I think broadly, if you see the very sharp depreciation in rupee, it would definitely cushion the earnings for most exporters, including IT, pharma, and to some extent chemicals. So I would be fairly constructive. Yes, AI may have impact in terms of what you call how many incrementally, how much people are needed, and there needs to be some recalibration on that side. But I think most Indian companies will adapt to that in a very fast manner, and they should continue to thrive going forward.
Is EMS, any of the EMS related plays attractive post the correction?
Well, I think the sector definitely has a lot of growth potential. I think there are several sectors where government is introducing PLI opportunities, and therefore, be it auto, be it railways, be it semiconductors, a lot of these EMS companies will benefit. So, as and when we believe the valuations are comfortable, we would definitely look at that. But definitely, the sector has a long runway for growth.
Okay, all right. So those are some of the key spaces that you're looking at. Finally, Varun, to sort of distill it all down, run up to the budget. Any major expectations that you have? And again, in terms of positioning, are you expecting a big push again on capex? And therefore, what placement and sort of how much of exposure would you give that give that to the portfolio where it comes to the capex related plays and ideas?
Yeah, I think two large expectations at least that we would have is one, of course, on the capex, the thrust on capex to continue, and second, if there's some kind of stimulus from a tax cut perspective for the middle class and the lower middle class. I think both these themes, we would hope would play out. Therefore, we expect some push on consumption side, especially the rural facing consumption, and of course the capex theme as we spoke about. So I think both these areas we would be constructive on going forward.
Thank you very much for that. Numbers coming in from Best Life Food. Net profits are down 59% on a year-on-year basis. The stock is up close to about 1%. Revenues are up 9%, but a sharp drop-off seen in the company's profits. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D-Street Chatter. Also a few BTST calls from our experts.
It's a rocking trading session. You'll have to say it because we're holding on to those gains. We're up 200 points. You've gone past the 23,150 odd mark. You'll want to go into expiry day with this sort of a, look on the screen. And also, hopefully tonight, Fed chair doesn't disappoint. Then you could be bracing yourself for a solid close to the series. That's the hope. Let's get in Nimesh. Nimesh, what are you making of today's trading session? Oversold, we were talking about it yesterday. Maybe, in fact, it was getting over-exaggerated on the downside. And a bounce. But what are the flows looking like?
So, Nigel, a good pullback for second day running in the broader market names. And that's where, I've been saying for the last few days that it was oversold. Even yesterday in the first half, a lot of margin calls got triggered. A lot of forced selling happened in the broader market names. So, I guess that's the reason why you're seeing a strong pullback in today's market. Mind you, there is no big buying in the broader market names, but only lack of selling is leading to a pullback in many of those very extremely beaten down stocks in the broader market names. So that's overall feedback. Both the indices, the mid cap and small cap, have been another 2% in today's market. Also, the other important aspect, Nigel, for the broader market is, if you see for the last couple of days, the earnings season has not been that disappointing in the broader market. Even today, there were a lot of stocks which are reacting to very strong numbers, like Ami Organics is up 20% on back of very strong showing. So is something like Sirma, that's rallied 20% on back of very strong numbers. So in the broader markets, especially the earnings season has not been that disappointing at the margin for many of those names. And that's the reason also why we're seeing a bit of pullback in the broader market stocks today. From an institutional activity point of view, I think today is a day when the institutional activity is on the buy side. So most of the funds seems to be better buyers. And also it has to do with the expiry tomorrow. So a bit of reverse arb as well is the sense that I'm picking up as far as flows are concerned. On the downside, 22,800 has seen as a big support, and that's been respected. Now it's a crucial thing. 23,300 will act as a very strong resistance, at least in the near term. So, of course, there is an expiry tomorrow, so you might see that volatility. And we have a big budget on Saturday. But looks like at least the near-term pain in the broader market seems to be largely over. The forced selling is over now. And even with a small bit of buying, you're seeing very sharp reaction in the broader market stocks.
Okay, thank you. Good day, Nimesh, to talk about individual stocks then. So what have you picked up?
Well, so Rima, in terms of individual names, the first stock on my list is LIC Housing Finance. Again, the stock has corrected very sharply. Now seeing a bit of buying interest back. There is delivery-based buying in today's market as well. So expect high delivery volumes, and looks like some institutional interest is back, especially in names like LIC Housing, which benefits from potential rate cut, which might happen in the Fed policy. So that's the first name. The second stock is Paytm. Again, that stock has sharply reacted in the last 2 weeks or so. A bit of bounce back in today's market. Volumes are on the higher side. But in Paytm, the sense is maybe there is a large block which is round the corner and may happen very soon. So that's something to track in Paytm. The third name is JSW Energy. That stock is under pressure today, weak earnings, and there is selling as well from larger FIIs, even after a bit of underperformance in that name. So that's the third stock. And the last one is Linda India. That's interesting. I was surprised why the stock is up 12% in today's market. But yesterday there was a large block, 2.5 lakh shares got changed hands. I believe the domestic mutual fund was a seller, and a very large long-only fund was a buyer in yesterday's block. And after that, we're seeing a very sharp reaction in Linda India today.
Okay, all right. Thanks a lot for that, Nimesh. So those are all the top movers in trade and news that Nimesh is picking up. By the way, just keep your eye on IMFA, Indian Metal and Ferroalloys. We'll try to get the management tomorrow. For the time being, the stock has lost more than 10% of its market cap. The numbers look quite disappointing for the past quarter. And the fear is that in the coming quarter, there is some softness on ferrochrome prices. So that's why IMFA, Indian Metal and Ferroalloys, that stock is now down close to 10%. Tomorrow, we'll get the management on the channel to clarify what's going on. And there was this buzz that could be some corporate action. As of now, I don't see that, at least in this results. So maybe some part of the street believe that there could be something on that front. Numbers not very, very great and missing in terms of the corporate action. So we'll require some clarity on both these two facts. We're telling our viewers tomorrow we'll get the management and in fact clarify a couple of these details. Mitesh Thakur is back with us though. Mitesh, good session. Maybe today we go home with solid gains and maybe at the high point of the day, unlike what we saw yesterday. Your take the money off the table, or do you believe we'll ride for a little bit longer, and also a couple of stocks?
Yeah, so I think, I would want to hold on to long positions purely because the bias still remains on the upside. And I believe that the way the indicators are shaping up, there's a chance of this pullback extending. While it can be choppy because we have had 2 days of good rally and could be a day of or a few hours of pullback as well within this broader bounce. I still believe that the direction is on the upside. So in the direction being on the upside, we'll take some long BTSC calls. IEX is a BTST. Keep a stop just below levels of 177. Look for a target of 181, 182 for tomorrow. And the other one which I like is Indian Hotels, which is a BTST with a stop just below levels of 769, targets of 786.
Thank you very much for that. Indian Hotels is up nearly about 3%. Let's get to Bajaj Auto. Now, numbers were ahead of street expectation, particularly on the margin front, and the company sees healthy demand in the 125cc plus segment, and they've also managed to maintain their market share. Now, earlier today, we had a chat with Rakesh Sharma, ED of Bajaj Auto, to talk more about the numbers, the exports, the EV portfolio. Listen in.
The story for the quarter was coming in at fifth straight quarter of 20.2% EBITDA margin. And it's really driven by a combination of very judicious pricing being taken across the portfolio at regular intervals, as well as, the supportive softening of the rupee, which happened at a very good time from our point of view because of the expansion of the exports business in the quarter, where after almost 9 quarters, exports crossed 500,000 units or $500 million in terms of dollars. The electric business now is about 22% of our domestic revenues. The motorcycle industry was clocking something like 6% growth. And it's really the 36-day festive period, which saw a massive upside, going up to almost 16% growth during that period, which has lifted the year-to-date growth rates to about 8%. Management of KTM AG is busy putting together a restructuring of the debt plan, supervised by the court, as you know. And there is quite a definitive timeline for that, which is 25th of February. By then, that is when the plan will be presented to the administering officer as well as the other stakeholders. And once that plan is accepted, I think things will start to get to normal, and hopefully the business can start getting restored in the subsequent quarters.
Okay, all right.
All right. Well, I think let's focus on another number then. We have JSW Energy, which is under pressure after reporting muted set of numbers. Vivek joins us to help us understand why these numbers are weak. Vivek, take it away.
Well, that's right. So JSW Energy came out with its numbers post-market hours yesterday. Remember, the company has a significant portion of its capacity that isn't tied to long-term PPAs, so it ends up selling quite a lot of power on the short-term power markets. What actually happened over here? While volumes weren't muted, but the real problem wasn't the volume, it was the fact that merchant prices this time around were down almost 26% on a year-on-year basis. On the back of that realization, and the top line is something that took a bit of a hit. So revenues were down almost 5.5% on a year-on-year basis. EBITDA down 17.5%. Margins too cooling off at 38.3% versus 43.7% on a year-on-year basis. Net profit down over 30%. Now, what CLSA says is that the company faced spread compression, this on the back of weak merchant prices, and also the company started wind capacity operations in what is seasonally a very low season. Now, along with that, the management said that they actually saw organic capacity additions go ahead and add aid positively, but this was actually offset by much lower revenue coming in from the hydro plants. So DAM prices, like you mentioned, were down 26% on a year-on-year basis. The management also is hopeful of a slightly positive outcome regarding the BESF tariff that was disallowed by CERC. The next hearing is on February 6th, and that is one key trigger to watch out for as far as JSW Energy is concerned.
Thank you very much for that. Mayuresh Joshi from William O'Neill is now with us on the show. Mayuresh, over the last couple of days in the correction and the rebound, have you recommended any stocks to your clients? And if yes, which ones?
Good afternoon, Rima. No, again, I think we have been a little bit cautious over the last few weeks, remaining a little bit light at this juncture. And out of all the markets that we track, developed and the developing markets, I think a lot of markets are probably coming under pressure, both from a macro perspective in terms of what is happening with global bond yields, the delay in the interest rate cycle. And therefore, I think the macro picture for most economies probably in a downtrend as we speak, and that is probably getting reflected in terms of how micro earnings are expected to shape up. So I think earnings is a very key aspect in terms of our EPS rating parameters across market, and that probably looks a little bit wobbly as we speak. Obviously, I think over the next few days, if the market probably stays the way it is and sustains the lows that we've made, specifically on Nifty, and it holds on to those lows, and we get into a rally attempt, there is some element of sense that the market might be recovering from the oversold zones that we've probably seen. And therefore, 3-4 sectors probably come into the limelight as well. Agrochemicals as a space, I think the numbers have been pretty decent for a few companies, including the likes of Sumitomo Chemical India. I think the 9-month performance in terms of EPS numbers, they're doing around 8.13 rupees EPS compared to 7.4 that they did for the entire part of last year. And therefore, with expectations of reasonable volume growth, farm gate prices remaining stable, input costs remaining stable as well, margins should sustain around that 20-21% mark on an annualized basis. I think this is one space that we are keeping a very close eye on. Hospitals as a space, we is something that we are keeping a close eye as well. I think a lot of the EPS RS rating institution holdings still holding up for a few players, including the likes of KIMS as an example, where the annualized run rate on what we map over the past 3 years has been pretty decent, 27% top line growth, 30% EBITDA growth, reflecting in very, very strong bottom line growth as well. And therefore, with the bed additions that they've probably done over the last few quarters, the occupancy rates have come down purely because of the additions done in the last 2 to 3 quarters. The average revenue per bed at 38,200 rupees should show sustained upward movement because of the therapeutic additions that they're probably adding across the hospital chains. And therefore, earnings probably might hold up for hospitals as a space, and being very, very selective on banks. So I think we continue holding a bank like Karur Vysya Bank in our mid-cap banks portfolio, because our belief is the numbers that they've presented and the commentary thereof in terms of asset quality, provisioning, advances growth, tier 1 capital that they're having, and the return ratios that they have been posting should probably sustain with strong credit underwriting both in the commercial and corporate markets.
Okay. All right, Mayuresh, got that. Stay on. We'll discuss some more stocks in a bit, but we also have some important earnings that are still lined up today. Tata Motors is, of course, going to be coming out with the Q3 print. Sudarshan's back with us to give us a heads up. How is it likely to be, Sudarshan?
So sequentially, if you look at earnings, there might be a rebound because in Q2, company had announced about facing issues related to supply chain. But YOY earnings might be flat. But on JLR front, earnings are likely to be strong. So overall profit is expected to move lower 8% YOY. Revenue may increase by 5%. EBITDA can move higher by 4%, and margin can be around 14%. It's likely it may be at 13.7% versus 13.9%. For JLR, revenue is likely to increase by 11%, and average selling price that we also call realization may increase by 8%. What would we expect from the management? What exactly is on the guidance on JLR EBIT margin front? We are expecting that there might be a slight increase because as of now, the guidance for FY25 is 8.5% plus. Also, if there is a commentary related to supply chain issue, if there is an update on that front for JLR. So overall, on QOQ, rebound is likely. On YOY, it's likely to be flat for Tata Motors.
Okay, all right, got it. Sudarshan, thanks very much. Let's also talk about Bajaj Finance because that's the other major Nifty earning that will come out today. We have Abhishek joining in with a heads up. Abhishek.
Well, Bajaj Finance had given their, pre-quarter business update wherein the loan growth was pretty strong at 28% YOY and about, 6.5% sequentially. Whether that translates into, PNL or not, we need to see that. So net interest margin can decline YOY but remain stable on a sequential basis. Analysts are estimating a 47 basis point decline in net interest margin YOY and 1 basis point increase on a sequential basis. Now, credit cost can inch up marginally, so analysts are expecting a 4 basis point increase in credit cost on a YOY basis and about 2 basis point on a sequential basis. Stability in asset quality will be a key. We have seen unsecured portfolio deteriorating for lenders, so that stability will be a key. A management commentary with respect to future outlook for growth and asset quality will be very important. Our poll suggests NII growth of 22% YOY and about 5.5% sequentially. We are working with a profit growth of 12.5% YOY and about 2% sequentially. Back to you.
Okay, all right, got it. Abhishek, thank you very much for that. We'll take a very quick break, come back with a couple of further stock questions for Mayuresh in a bit.
Welcome back. Just keep an eye out on a few stocks that come up for you on the screen. GMDC, because of all that talk about critical minerals and focus out there, the stock is now up close to 10%. Keep in mind the stock has corrected 40% from the top, and we want to hear by on clarity in terms of what they're going to do out there. For the time being, the street is celebrating it, but you pull up a one-year chart, you'll see what I'm talking about. 500 rupees to around 320 rupees after today's 10% up move. So I think my producer will get it up. Yes, up for you on the screen. Still down close to around 30%. The other one I'm looking at is ACC and Ambuja. Both of them are under some pressure as well. The numbers had a couple of one-offs, but operationally, weak set of numbers. Both of them now seeing some kind of selling pressure. But Yash is here to tell us about an exclusive insurance story that he's bringing to us. And Niva Bupa is the stock that we're talking about. Yash, over to you.
Well, remember, Nigel, in 2024 is when the insurance regulator IRDAI had introduced limits on how much insurance companies can spend altogether. The limit for general insurance companies was 30% and for standalone health insurance companies was 35%. Now, there were a few companies which were ahead or had exceeded that limit at that point of time. One of them was Niva Bupa, and Niva Bupa had reached out to the regulator asking for an exemption, asking for a glide path to comply with that 35% of expenses of management or EOM limit. Last entire month, there were hearings which happened at the regulator's door for the same reason, as the regulator was considering case by case on these requests. And what we've been given to understand is that IRDAI has allowed Niva Bupa a glide path to comply with that expenses of management limit of 35% by FY26. According to my sources, the company seems to be confident at this point of time to comply with that limit of 35%. And also, just to put in context two important numbers, at the end of FY24, Niva Bupa's expenses of management were at 39.31%, and at the end of H1 FY25, it was at 40%, which means about 500 basis points of reduction is what the company needs to bring in its EOM to comply with that limit of 35% by FY26.
Okay, all right. Thanks a lot for that, Yash. Well, we still have Mayuresh with us. Mayuresh, any view on the stock?
Not really, Nigel. We don't cover it, but a large part of the space itself and insurance players are going through a change in their product mix since the budgetary changes over the last 2 years. And therefore, I think you've started seeing some element of number improvements that have started happening, both in terms of value of new business margins, expectations of the higher annuity premium products are probably getting larger and garnering more market share, which means the product mix is changing for the better. Obviously, the commission and the upfront expenses are a tad bit higher for the likes of a large part of the life insurance companies, except SBI Life. But I think things are changing for the better, which might reflect better in terms of embedded value. So don't I think insurance players should probably.
Got it. All right, Mayuresh. I think we're almost out of time, but appreciate you joining in, Mayuresh, and filling us in with all those, with all that advice on a lot of stocks. We'll see you on Markets Forward in just a bit. By the way, just keep an eye out on a few stocks. You have Infra that's seeing a lot of selling pressure. That's moved to the low point of the day. Lack of good news, lack of positive numbers, and lack of that corporate action announcement as well. That's where the stock is selling off. On the flip side, NBCC, stock now at the high point of the day. Piramal Pharma up close to around 10%. Reliance Infra is another one actually that's up close to around 3%. Remember, the stock has corrected 350 to around 240. But it appears the large sellers getting cleared out on Reliance Infra. So that's why, in fact, that one on high volumes, it's up close to around 3% as we speak. Other big movers in trade, IFB Industries. The stock is down close to around 14%. Big selling pressure is what we're seeing on that name. On the flip side, Anand Raj bounces back. Orient Pro bounces back. Both of them up 10% apiece. You have Sigma SGX that did very, very well in today's trading session. Rocket move out there. TVS Motors builds on to those gains. And Shriram Finance went through a month of underperformance, but that's returned to its winning base, up close to around 4%. BEL as well, up 3.5%. Tata Motors ahead of its numbers, up 3.5%. And SBI Life up 3.5%. Trent, that saw a one-way correction all the way from around 8,000 rupees to around that 5,500 rupees odd. That popped up in trade. Bajaj Auto as well, firing away, kick-starting the engine. That stock going home with good gains. Maruti Suzuki, a little bit nervous after its numbers, but keep in mind the stock had already had a run-up of close to around 10% or thereabouts.
What a perfect day, Nigel. The bell goes off. We've ended at the highest point. We're now just a notch up below the 23,200 level as well. It's been an absolute good comeback by the bulls. 345 points higher on the Nifty. Bank Nifty looking stellar, and the mid-cap and the small-cap index also retaining plenty of gain today. The bulls will want to see more of these days for sure. For the timing, the bell is gone, so we have to take your leave on closing bell. But Nigel and I are still very much here. Markets forward coming up right after this quick break.